right. And let's go to a
Perfect
chart.
timing again.
We're getting there.
Right at the open.
Thank you very much, Ken. And Ken, why don't you start us off? Let's look at the S&P 500, and maybe you can sprinkle in some of your commentary with the SMT video, which you did, I believe, together. Was it with Ed or was it Justin yesterday?
It was me and Ed, as Ali is enjoying some well-deserved time off.
Absolutely.
So it seems like every morning before the open, we've got sort of a mixed, mostly unchanged performance for the major stock indexes. Yesterday, we had a mild distribution day for the S&P 500. Also stalling type action on the Nasdaq, but it only had a 6-point intraday spread. So even though the Nasdaq closed near its low yesterday, we didn't label it a stalling session. So mild distribution day for the S&P 500 yesterday, still holding right around its 10-day moving average in a nice uptrend here. So I think that the market is. We got that weaker than expected jobs report last week, and that's still giving the market a bid here, thinking that that the taper may still be a ways off. We'll see where the Fed is at. They meet this month, a key 2-day meeting, but major stock indexes are in an uptrend here, and looks like a quiet open for the market this morning. In terms of current holdings, I'm sure a lot of people are sitting on some nice percentage gainers in the portfolio. I don't think people would be wrong for maybe trimming some positions back, especially if they have stocks that have been, kind of wedging higher in light volume. We're seeing a lot of that. Seeing the indexes rising in light volume. So sometimes that can make for a weak foundation, but I've been trimming some holdings back. Still have pretty decent exposure to the market, but have been, taking in some partial profits. I did that with DocuSign. I know Justin did too, just before their earnings reports. So probably playing a little more defense than offense at this point. It's getting harder to find actionable charts out there, frankly. So just kind of letting my screens tell me, kind of letting the stock screens guide my decisions about whether to add stocks or take partial profits.
Great, thank you, Ken. And before Justin gives us an update about the status of, for instance, the power trend and the notable changes regarding the market school analysis, Irusha, I want to go to you. Can you explain your current stance in the market? Have you increased exposure? Are you being more cautious? How do you view the market as well?
We can't hear you.
It doesn't look like he's on mute.
It doesn't look like you're on mute. Just looks like
could be an I/O issue there. Okay. Yeah.
Can you hear me?
There we go.
Can hear you now.
Yes.
All right. Could you hear us?
I could hear you.
Okay,
I could hear you, and you guys are all very good. So I am more cautious, but I have plenty of exposure, and I feel like I have too much exposure, and I want to reduce. But the stocks haven't necessarily pushed me out just yet, so that's just kind of in the back of my head. A lot of these breakouts, I mean, there are plenty of breakouts that are just kind of going up a little bit and then reversing, and so it just seems like it's getting a little bit harder. So I'm definitely a little bit more cautious. I'm a little nervous because a lot of times September, I guess there's a stat, right? September is the worst month of the year, right? So that, even though my experience, it's kind of like July or August, but so I am cautious, but plenty of exposure.
Great. And Justin, any changes in terms of how the power trend is doing, or any other comments regarding the market you'd like to add?
So for those that don't know, the power trend is something that we talk about in market school for our market school rules. This is something that Charles Harris, Mike Webster, and I put together. It was a way of doing an automated version of looking at the market. And so the power trend is basically when you have that 21-day moving average line trending above the 50-day moving average line. And I'll have to say that it's while we are in a power trend right now. It actually just turned back on last week because we had we had gone to an under pressure condition. So it just turned on last week again to the full power trend. So, that's a positive. Typically what we do is we try and slow down our selling a little bit. That being said, me personally, I'm a little bit cautious, just as everyone else is. The market, the way it's been, is we haven't been getting much in terms of pullbacks, but we also haven't been getting too far extended from those moving averages before we have one of those very short and shallow pullbacks. I will say that one of the things that I like about the action recently is how tight it's been. You look at the Nasdaq, and Ken mentioned how it looked a little bit stalling-ish. The point spread was, as he mentioned, so small. Again, compared to average, it was like about a third of what the average has been over the last 50 days. And so we really hesitate to call stalling on a day like that. And it didn't look like it, but it did close in the upper half. But when the spread is that small, you can't tell, because the horizontal hash mark, it just it's almost it's too difficult to tell. So, but that was actually in the 52% trading range. Two points down, and it would have been a stalling day. So again, it gets a little bit meaningless when your point spread is that small. It just doesn't matter as much. But we definitely have had a lot of tight action lately, and where that's good is it just allows the moving averages to kind of catch up. It does show that there's some resilience, that the market doesn't really want to go down. But the pause is good, and what I was hoping is it might kind of pause enough to give us some more setups, because it has been, as everyone else has said, a little bit more difficult finding those setups. But distribution seems to be remaining light. It still feels like it's a market where if you can get in on those dips, the buy on the dip strategy is really working out. So going a little bit more aggressive on the pullbacks, and then selling into strength, that's been a strategy that's working well. But leaderboard has been holding some great names through the pullbacks, and leaderboard had a very strong month last month, as we discussed in the leaderboard scorecard yesterday.
Very good. Thank you, Justin. And also, I would just like to quickly highlight the relative strength line for the Nasdaq. You can see it's clearly in a short-term uptrend here. And if you were listening in to our show yesterday, David Ryan noted he acknowledged the strength of tech stocks. We have been really hitting a lot of those charts in the past several weeks to months. So we can see that. And also, I want to highlight that